Welcome to the Note Nuggets podcast, where you can learn how to become the bank, build wealth, and accumulate streams of income perfect for your savings or IRAs. You'll hear from industry experts, seasoned veterans, and everyday investors. Our goal is to teach you how to invest in notes, one nugget of knowledge at a time. Here's your host, Kevin Galang.
Welcome, ladies and gentlemen, to another Note Nuggets podcast. Like any industry, real estate has its fair share of acronyms and lingo. When you dive deeper into mortgage and note investing, there's an additional layer of mortgage and financial lingo. However, in today's episode, we're going to focus and talk about a three-letter acronym that I predict you're going to hear a lot about in the next year or two. Our guest today will break down what an REO is, as he's had experience as an REO agent during the previous real estate recession. Before we learn more about our guest and dive into today's nugget, let's talk about what's happening in today's market, economy, and especially the mortgage market, right? That's what we really are focused on this podcast. Now, as I'm recording this, it is August 2020. COVID is still around, and the U.S. unemployment rate is around 10% or so. Industries have been decimated by COVID, and the economy has taken a beating and continues to do so. With unemployment so high and some people unable to go back to work, the federal government and government-sponsored entities have pushed back foreclosures and evictions. As of now, Freddie Mac and Fannie Mae have officially pushed back foreclosures through the end of 2020. And the CDC has issued a ban on evictions through the end of the year as well. Now, with the economy in the current shape that it's in, it makes sense for the government to step in. However, while these foreclosures and eviction bans and government stimulus may be necessary, they are like putting duct tape around a water main that's gushing water. Think of it like a Band-Aid. COVID's impact on the economy has not subsided, and as the government stimulus dries up, people are unable to afford their mortgages and rent. Once this happens and the foreclosure and eviction bans are lifted, then banks and lenders of all sizes will have no choice but to foreclose and evict. It does sound like gloom and doom, I'll admit, but that's the current reality that we're in. As a lender, you do have the option of working with the borrower, whatever that looks like for you and your investors. But for the bigger banks, that's usually not how they operate. Which leads us into our nugget today. What is an REO, or the ABCs of an REO? But first, let's learn about our guest. Dave Franecki has over 30 years of experience in real estate, focusing primarily on three distinct geographic locations: Cincinnati, Ohio, Portland, Maine, and Phoenix, Arizona. He has experience as a realtor, a real estate broker, landlord, rehabber, loan officer, and note investor, just to name a few of the hats that Dave has put on. Dave enjoys teaching and coaching individuals how to build and implement their investment strategies through buying, selling, and creating mortgage notes. Can you elaborate on what an REO is, to break that down in the simplest terms?
REO means real estate owned. So again, with the 07-08 crash, banks were taking back thousands and thousands and thousands of properties, and then they'd foreclose, and then they needed to dispose of those. So REO meant real estate owned. I had my license. I took advantage of my experience and my gray hair. A friend of mine was in Albuquerque, Jesus Esparza, and he was an REO agent. And we had done some flipping together in Albuquerque, and we did well. And before that, of course, I was building and developing. And I said, Jesus, man, you got to do this building and developing. That's where the money is, not an REO. So after the crash, I said, I did humble pie. I said, Jesus, can you help me get in to be an REO agent? So he did. There was an organization called the NRBA, meaning National REO Brokers Association. You had to have a 3-year track record to get in, that being with REO. He put me in front of the line, which I took. And then Fannie Mae opened their office in Irvine. I applied. I started there, and it just kind of took off from there. So basically, I was brokering. I was working for Fannie or Freddie or whoever out there. As a listing agent, they'd give me the assets. I'd set them up and I'd resell them.
Okay, so to recap, make sure I understand as well, from an REO perspective, that's when a borrower has stopped paying, and let's say Fannie and Freddie own that note. note mortgage, they stop paying, they take it back. An REO agent is going to be the person that handles the almost remarketing of that asset. Is that correct?
At that time, yes. I'm sure the model's going to be different this go around with what's happening, but at that time, that was a model.
That is your nugget for today, the ABCs of REOs. If you want full access to my interview with Dave Franecki, head over to notenuggets.com/REO. All you have to do is sign up and subscribe to the podcast, and you'll get access to his full interview. Pay attention to what's happening in the market, because I predict that there will be a lot more of these, which serve as inventory for us.
Thank you for tuning in to this week's episode of the Note Nuggets podcast. Be sure to subscribe to the show to get access to additional weekly value nuggets and get notified with episode updates. To subscribe, all you have to do is head over to subscribe.notenuggets.com. If you have any questions about this episode or note investing, book a time on Kevin's calendar at contact.notenuggets.com. We'll see you next week with another note nugget to add to your tool belt.